Welcome to the Old Capital Real Estate Investing Podcast with Michael Becker and Paul Peebles. During this program, you will hear interviews with real-life successful investors who will share their stories and provide useful advice on how to acquire, finance, and operate apartment complexes. Now, here they are, Mike Becker and Paul Peebles.
Welcome to the Old Capital Real Estate Investing Podcast. I'm your host, Paul Peebles, National Underwriter for Old Capital. And of course, joining me today is Michael Becker.
Hey, Paul.
Michael, we have Rowan Properties in the podcast today, and I thought we would visit with them a little bit and get kind of a perspective of what they see going on in the multifamily business for brokerage and sales in the state of Texas, Dallas, Fort Worth, some of the secondary and tertiary marketplaces in Texas. And I thought we would kind of spend some time getting to know these guys a little bit better, have them kind of tell us a little bit about what they do, how they do it, and what makes them so successful. So I'm going to kind of kick it over to you, Mike, and let's have you kind of introduce the guys.
Thanks, Paul. So we have 5 of us in the podcast today with us. So we got all the guys from Rowan Properties. So I'll kind of kick it over to Mike Burch to start. So Mike, maybe kind of come in, tell us a little bit of background, and introduce everyone at the table with us.
Sure. So we've got Matt Waskow. Matt is one of our head analysts and does a lot of escrow management for us. Bradley Burch. Bradley is analyst and broker, Colton Burch and Pete Hartnett. And Pete and I have been in business together for a long time. So we've got kind of a group here of, I'd like to think, a lot of experience and some of that raw energy. So.
Yeah, good. So tell us a little bit about Rowan Properties. How do you guys form? A little bit about your background. You're the head of the shop here, so maybe kind of tell us your genesis, your background, and how we got to where we are today.
Yeah, so Rowan Properties, we've been in business with this name, this entity, for about 3 years now. But I personally have been in the business since the early 80s. Came up through the corporate brokerage background, was in management for a long time. Been able to work with a lot of very successful people, both in brokerage and in apartment ownership. So we've been through all the cycles. We've seen a lot of stuff happen, and we're lucky to be in this kind of a market today.
That's good. So what do you guys focus on as far as asset class types of multifamily product? What do you guys focus on when you're out there listing deals?
Well, obviously, all we do is multifamily brokerage. Our specialty falls into that C to kind of A- class product. The sweet spot would be, somewhere in that average deal of 150 units. And we work anywhere that our clients, we have relationships, but certainly there's a lot of business in North Texas right now. So we're working a lot in the Metroplex and some of the tertiary and secondary markets.
So how's this year been so far? We're about halfway through. We sit in the middle of July today. So how's the year been so far to date, and what do you kind of see going on for the rest of the year for your shop volume-wise?
So far it's been a really good year for us. We're sitting at about 12 closings halfway through the year. Our goal is to hit 25. Hopefully we can do a little better than that, but that'll end up being a really good year for us. It appears that the market is going to continue doing just what it did last year. So all the arrows are still pointing up. We think it's going to be another good year.
And do you guys just focus in on Dallas, or do you also do some secondary and tertiary markets too?
Yeah, so, certainly Dallas, we're here right in the middle of North Dallas, and this is kind of where the action is. But we've sold deals in Waco, Tyler. We're working deals in Killeen, Corsicana. Where else, guys?
All over.
Paris, Terrell, Greenville.
Did you mention Granbury?
Been out in Granbury.
Yep.
Yeah.
So why are people buying in the secondary markets? You just said, make sure I heard you right, that the action is in Dallas, but is there just too much action in Dallas in that some of the secondary markets have some opportunities out there?
Well, I think that is it, right? You're trying to find an opportunity, and in this market, it's a seller's market, and it can be very frustrating if you're a buyer. So you're trying to find that opportunity. And to go to a secondary market, tertiary market, it puts you under the radar screen a little bit. And it gives you an opportunity to see deals that you wouldn't maybe normally see. There's probably not as much competition, and you're probably going to get a little bit better return if you're willing to go to a market outside of the city.
Now, Can you think of a transaction you guys have closed in the secondary market that you thought was interesting? And why did that person buy in the secondary market? Was there a lot of competition? How they've done since they bought it? Can you give me an example of a secondary market transaction you guys have closed?
Well, we did sell a deal earlier this year in Waco, and good, solid B-class property. Interesting, we had a ton of interest, and we were able to appeal to buyers who typically would not go. In other words, they weren't looking necessarily to go to Waco, but the deal was compelling enough. We were able to draw a lot of interest from buyers who are buying in the big cities. So we were really happy with the kind of response we had on that deal.
Well, you kind of put your money where your mouth is on something like that because you actually personally own in Waco too. So you're familiar with that marketplace. How are cap rates in Waco as an example?
Well, I think that you're probably looking at a difference of about 50 basis points when you go from Dallas to a Waco. Of course, it depends on the opportunity, but I think that's a good generalization. You should expect to get a better cap rate if you're going to go to a secondary market.
So we feel the secondary markets in Texas are still pretty strong, pretty active. Pete, you've been around Dallas for a long time here in the multifamily brokerage space. What have you seen here this last cycle? I mean, we're obviously pretty long in the tooth, it feels, or 7 years in the up cycle maybe at this point, since it's been a long time, since 2008. 2009. So, maybe give a little perspective on what you've seen over this last several years here in the market and kind of how it compares to some previous cycles you've seen.
Well, I think, first of all, I think we're going to stay strong. All the indicators are out there. There's still lots of capital available. There's lots of equity. There's lots of interest. I think it's going to continue to be a strong seller's market. In comparison to some other markets, typically in the past, I've been in the business, as you know, for about 23 years. You could usually tell at some point when there was going to be a turn, and it's usually about the same. In this case, we haven't seen that. We're at the end of our 7-year rent growth, and we continue to see, more rent growth and more job growth to some degree. So we see nothing but positive things. I mean, it's a crazy market we're in, as you know.
Yeah. What are some of the indications you've seen in the past that maybe are kind of telltale signs that we might be slowing up or reaching the end of the rope?
Great question.
Yeah.
Number one, I don't know if it's the initial thing, but for me, it's been when the lenders stop delivering capital. When there's no capital available, everything dries up. Everything stops. So that's going to be the number one factor. But there's usually other things that lead to that. And I think, it's going to be the obvious things like overbuilding. You get to the point to where it becomes so competitive that maybe the job growth can't keep up with the rent growth, and vice versa. So I think it's things like that will lead to that. And eventually it'll happen at some point. We're just not seeing that right now. All indicators are for continued great market.
So what do you see? So we sit about halfway through the year 2016. So what do you see where we sit today versus, say, 12 months ago or 24 months ago? Is there any material difference between, 12, 24 months ago versus today?
Absolutely. It's better today to be a seller than it was 24 months ago.
How so?
Well, you're in total control. There's a lack of product. Everybody knows it. There's more buyers than ever. It's a seller's market. We've had several situations where sellers are ready to sell. They appear to be ready to sell, and then for whatever reason, they decide not to sell, or they accept a higher offer. So that's the difference. I've never seen it like this during my tenure in terms of...
This is tighter than even back 2005, 2006?
In my opinion, yes, and mainly because prices per unit. I mean, I just can't believe where it's gone. I can recall years ago looking at, as you know, I used to work with Hendricks, or Berkadia, formerly Hendricks, and prior to that, Marcus Millichap for a long time. And it's crazy where this has gone. And the thing that was mainly different in 2005, 2006, where we weren't hitting those crazy prices per unit. And the reason I mentioned the other firms is I remember getting flyers from other cities, that we had a presence in. And for example, I remember seeing one in La Jolla, or maybe it was Carlsbad, and just seeing this crazy price per unit, $100,000 per unit or something for property built in the 60s for 20 units,
right,
off of Highway 1. And I'm thinking, who would ever buy that? Who in their right mind would buy that? And, that'll never happen here in Dallas. I remember being a relatively new guy years ago at Marcus and Millichap, and I can remember the day that we found out mid-'80s product had traded at $25,000 a unit. And it was just, It was unbelievable. We couldn't believe that product was selling for such a high price per unit.
Right, and so now routinely we're hitting six figures, 100,000 a door for a mid-80s product in well-located areas here. So
no doubt. We sold a deal last year in Granbury in the tertiary market and had the record price, $88,000 per unit. Today it may sell for north of $90,000 per unit. Yeah. Mid-80s product.
Yeah.
Tertiary market, $88,000 a unit.
Yeah, that's nuts. So, Mike, Pete, you guys have both been in the business a little bit longer than the other guys. So what are some of the things you've seen that have kind of separated successful, long-tenured owners versus those that have kind of flamed out and went away with the cycle?
I'll address that if I can, please. I think the buyers that have over-leveraged, sometimes they have a tendency to get in trouble. But along with difficult times comes great opportunity. And the people that I've seen that have been really successful were the smart buyers, the people that waited when things started getting a little volatile. They waited and they decided to, hey, let me keep my powder dry. I want to be ready to fire because these difficult times are going to create huge opportunity, and they always do.
Well, what I would add to that, I would say this. If I have a concern, there are a lot of first-time buyers that are coming into our market, and there's always a learning curve when you're a first-time buyer. So you've got to be careful. You've got to be connected with the right people, the right lenders, the right brokers. That'll make a difference because you can't afford to make a mistake on your first deal or two. You've got to be well capitalized, and you've got to make sure that you're spending the money where you should. We hear a lot about value add, which is great because there's a lot of that going on. People want to put money where they can get rent for it. But there's also a lot of deferred maintenance. And you've got to have your property in a position to where if there is a time where there's a dip in the market, that your property itself is in good condition. And so that would be one of the things that I would say would be important for today's buyer.
So you've made it through a couple different cycles as an owner of properties. What's your counsel? Again, is it similar to what Pete's is be a little bit conservative with the leverage, put a little bit more money away every month? Because sometimes there's going to be storm clouds that are going to be out there at some period of time, and you don't want to be the biggest target out there. What's your suggestion to some of the new guys that are coming in that want to keep these properties through another cycle?
Well, that's exactly right. I mean, Pete hit it. The leverage that you have on your property is everything. I mean, if there's a dip in the market, you just have to have a little bit of a drop in occupancy, rents go down a little bit, and all of a sudden you're struggling to break even, right? And then that's when you get in trouble. So I would say that to try to offset that, the one thing that you have to do, you have to be realistic about what your budget is when you go into it. What I see is that most of these buyers, I put us all in that category, you're still trying to figure out how you can increase rent, lower expenses. And so if your pro forma is built around those items, then you have to be just on point. But there's not a lot of margin for error. I'd rather see properties that are well capitalized, money that's been set aside, taking care of deferred maintenance, and very realistic on your underwriting for operating expenses. So
on something like that, you guys have done very well in the brokerage business in the last number of years. You've sold a lot of properties that foreclosures at one period of time. Why do you think some of these deals went into foreclosure and gave a new buyer an opportunity? Was it the lack of capitalization up front, doing all the work to be done on the property? Just not knowledgeable buyers, wrong management companies, not having enough money for property taxes on the increase. I mean, what do you think some of the core, one or two or three core problems that these past buyers that lost their properties found themselves into?
I'm going to say all the above, Paul. All the above. I think you have to be cognizant of all those things. One thing we haven't touched on, and this is my personal opinion. Now, I've represented a lot of special servicers and lenders on foreclosures in the past, and I was fortunate to do so. But the one big thing I saw was where, let's say, for example, an out-of-state investor would come in. He doesn't have a local presence, or maybe he does, but they tend to over-rehab for an area or a submarket or a neighborhood. In my opinion, don't over-rehab. You want to be the chunk of coal in a diamond mine. If you fix that chunk of coal up into a diamond, you don't want to be a chunk of coal in a coal mine and fix it up like the Taj Mahal. And then all you've done is created a nicer property that's still competing at the same level with the other properties. And I saw that occur multiple times.
That's well said. I mean, I don't know what I could add to that. That's a great example he just used.
Yeah, one of the things I think Paul and I both realized was, like I said, poor management, buying in inferior locations, kind of like Pete was just mentioning, and then maybe having a maturity at inopportune times. So some people taking adjustable rate loans and having short bridge loans with maturities in 2 or 3 years, and you just happen to have a loan maturity in 2008. So that's an inopportune time. So if you can take your maturity out a little bit further, maybe it kind of hurts your upside in the deal, but certainly helps you keep your skin.
What I like about Mike and Pete is, they are, I hate to say it this way, but they're the old dogs in this business, but there's a lot of experience that comes with Rowan Properties. They've gone through a number of cycles. They know a lot of the ownership groups because either they bought it or they've sold the property. They've represented, both sides of the transaction, so they have a lot of presence in the Dallas-Fort Worth and the secondary tertiary marketplaces. So, spend some time and get to know the Rowan Property guys. So that's the old guys. Let's talk a little bit about the new guys and kind of have them tell us a little bit about what's going on in the marketplace, what's working, what's not. Colton, Mike was talking about a little bit about how competitive the market is. Are you getting hard money, all these transactions where the buyer wants to buy and the seller's requiring lots of hard money? Is that what you're seeing?
Absolutely, Paul. Thanks for having me on. Yeah, I would say hard money day one is a very important thing to the sellers these days. And the way the market is right now, it's not like you're getting a huge discount on your pricing with the hard money. It's just something that comes along with the nature of the market right now. And so you're not only going to have to pay the highest price, but also put a significant amount of hard money down to really have the best shot at the deal. Now, like Mike talked about earlier, that changes a little bit when you go into secondary and tertiary markets, and so I would say, hey, you got to figure out what's the best investment for your money and where you want to get your return on investment. Is that through rent growth in the major markets like Dallas and Houston and Austin, or are you willing to look at more of a yield in smaller markets, secondary and tertiary?
How are you seeing the differences in how transactions are trading when you have a properties offer free and clear, so you put new debt on versus one that has a loan assumption debt that has to be assumed?
That's a really good question, Michael, because, there are a lot of loan assumptions happening right now because people locked in a long-term debt a few years back, and they're trying to sell those properties now. And so to assume a loan can be much more difficult than putting on new debt. If it has to have less than or more than 5 years left on the loan, and there's a few other factors that factor into that. But we're seeing less hard money day one on loan assumption deals than we are on all cash deals.
So if a lot of the people listening to the podcast are new or aspiring or are relatively young into the business, so working with a brokerage shop, maybe you guys can kind of talk about, if I come to you and I want to either buy a property, if I come to you and I have a property I want to sell, maybe kind of talk through the cycle of how do we do business together. Maybe you can kind of do Brokerage 101, how do you guys transact business, and talk through that a little bit so someone can understand what to expect when they engage the services of a multifamily broker.
Yeah, I have a few comments on that. It seems like everybody wants to own apartments these days. We get lots of calls from folks that say they want to get into the business and buy some apartments, but for us to really take time with the buyer and show them deals and spend time with them, we want to make sure they've got the people in line and all their ducks in a row before we go chase after a deal.
So what does that mean? So if I'm let's talk on the buy side. So if I'm an aspiring buyer, what do I need to do? What do I need to come to the table with to you, Colton, if I'm looking to have you go call on properties or even let me look at one of the properties you have listed? What should they have lined up before they pick up the phone and call you?
That's a really good question. So a financial statement showing that the equity that you need for the deal is ready to go. We understand there's a lot of syndication groups these days through family partnerships, and just different partnerships. And so just showing that equity is lined up either through you or through your partners, that is a huge part. Also that you've talked to and engaged with a lending source and kind of have a good idea of what your loan is going to look like, and as well as what your cash on cash expectations are going into these investments.
So, Mike, maybe you can take this one. So, if I'm wanting to sell a property, you're trying to sell a property that I own. What are some of the things that I can expect if I work with a brokerage firm like yours? Like, how do you guys analyze deals? What's kind of a typical cycle of a deal like that?
Yeah, so obviously, if we're talking to you about selling your property, we're going to want to know everything we can about the property. We're going to ask you for, at least 12, probably 24 months worth of operating information. So we'll do a very thorough analysis on the property. Typically, we will trend the property up. In other words, we'll take the income, a trailing 3. It's basically what everybody does, and I think that's what most of the lenders look at. We'll try to normalize operating expenses by putting in capital, adjusting for taxes. So we'll come up with a realistic net operating income, and then we will give you a price range. I mean, this is not an exact business, but we'll talk to you about a price range, about what your expectations are, timing. Obviously, the debt, the existing debt on the property is going to end up being a big component as to how we sell it, depending on how much debt, interest rate, whether it's assumption or not. It's certainly much easier in today's market to sell a property that can be financed and be purchased all cash.
Let me ask this to Bradley. Bradley, when you're doing the analysis itself, when you're setting these deals up for the team, give me kind of a checklist of what you're asking for from the seller to get in your hands so you guys can do the right analysis of the transaction.
We're going to want, first of all, just an overall P&L statement, preferably a trailing 12. We also want a rent roll. We're going to look for any capital expenditures that have been made probably over the past 2 to 3 years. For example, a new roof put on, foundation work, parking lot improvements. From there, we're going to take your current rents and what you're currently running at on a profit and loss trailing 12 basis, what your current NOI is, and we're going to come in and we're going to say, hey, if a new property owner were to purchase this property, what can they do with it? What can they make of it? Where can they get rents? Where is this area trending? And from there, we are going to put a price on it based on future income. Sounds good.
Mike, let me throw this back to you. With Mike Becker thinking about selling a property, so to speak, in this example, why are people selling properties? I mean, what are you hearing? Or why are people not selling properties? We talked a little bit about the market being better today than it was, say, 18 months ago or 24 months ago. Is it difficult to try to find sellers to actually sell properties? And what are some of the reasons why they're selling? And what are some of the reasons why they're not selling?
Well, good question. If you think about it, we used to always say that if you really want to find out if you have a seller or not, you dig in and find out what his motivation is. And I would say today's market, the only motivation, with few exceptions, has to do with price. Most owners recognize that we're in a really, really good market. And it really is a challenge if you're a property owner today to figure out if you want to sell or not. Because let's face it, operations are good. Financing is good. Most people are cash flowing. So they look at it and they go, okay, this is a good time to sell. But then the question comes up, what am I going to do with the money? And that takes you into a total different conversation. So that's one of the challenges that we have right now. Yes, everybody recognizes it's a good market to sell in. Most of the motivation is strictly driven by price. But the challenge is, what are we going to do with the money once we sell?
Yeah, without naming names, say the last 2 or 3 transactions that you guys actually have sold, what was the reason why the seller was selling?
Candidly, I don't know how to put it. We brought them an offer and a price that I think the seller thought was more than the property was worth. And I can't think of the last time where we had a seller and we go, wow, now this guy's got a gun to his head, or there's something out there that just he has to meet some sort of a time frame or deadline. Or we used to see that with loans coming due, but it's easy to get properties refinanced now. So again, I go back to that thing that we see overwhelmingly. It just has to do with pricing.
So everything's pretty strong right now. Is there any, Matthew, Mike, anybody here, any challenges you're seeing when we're analyzing these deals, like operationally? Like one of the things I know as an owner that I've encountered are some property taxes this year, particularly locally in Tarrant counties, have been a little bit of a challenge. Besides property taxes, are there any things you're seeing commonly that potential owners that are going to sell or potential buyers are facing in the marketplace today?
Well, you hit it. The one line item that we all pay close attention to today has to do with property taxes. You're right on that the taxing authorities we've seen substantial increases in assessed values, and that ends up with you trying to get those adjusted down and normalized. But when you're acquiring in a property, if you're a buyer or if you're a lender underwriting the deal, you're going to make in most cases, a fairly significant change to the property taxes. In our underwriting, we're taking our deals to 70 to 75% of assessed value. So that's how we're handling it.
Okay. Maybe one last topic here before we wrap it up. Maybe talk about some of the things you mentioned earlier about value add. So I don't know if anyone here has some opinions, but what are some of the most successful value add strategies you guys have seen in the marketplace, either on the exterior or interior? Like what's really driving revenue at these properties?
Yeah, I'll take that. A lot of it comes to how efficient you can be on your upgrades on the interiors. People definitely want to have a community-based living situation when they live in apartments, and they want to, have a nice amenities and nice interiors. And so I think for the B-class deals and well-located assets, that's a huge part of it. On an amenity basis, I think that one of the things that came in for a while was business centers. Those are kind of fading out some now, more toward fitness centers and anything that you can add to your property that will drive a community aspect on the apartment complex. That'll keep tenants there longer, cut down on your make-readies, and so it's just an overall benefit to the property. If I may hit one thing on the property taxes, people out of state remember that Texas is a non-disclosure state, so you do not have to disclose the purchase price of the property to the taxing authority, but those guys are definitely catching wind that the market's hot and prices are getting higher.
Let's kind of go back one more time, Colton. I mean, we talked about how hot this market is, and we have a lot of people coming in from different parts of the United States coming into Texas and taking a look at opportunities in the multifamily space. But tell me a little bit about how you guys want to be treated. So someone calls up and say, listen, I heard the podcast. I've seen some of the advertisements. I've gone to the website. And by the way, what's the website address?
The website is www-rowan, which is spelled out ROWAN -properties.com.
So Rowan, ROWAN-properties.com.
Yes.
So how do you guys want to be treated? You guys, everybody wants to buy this, $3 or $4 or $5 million property. Do you want to have them tell you what properties that they're interested in? Do you want to sell them a property that's possibly that you brought online? Tell me a little bit about how you guys want to be treated by the potential buyer. Do you want them to tell you what they want to buy, or do you want to just show them opportunities?
So if I might take that, Paul, I would say we're a very relationship-based firm. And so the more detail that each person that calls in can give us on what them and their partners are looking for, the more aggressive we can be in spending time with them and finding the right opportunity for them and their investors.
Yeah, that's my point. I'm trying to break it down instead of having the shotgun approach, having the rifle approach, and having communication of exactly what that person's looking for. Because again, that's a broad topic. Everybody calls you and says, hey, listen, I want to buy that $5 million deal. Well, where do you want to buy it at? How many doors do you want to own? Do you have any multifamily experience?
Yeah, as a broker, I can tell you that when people call in and say, I want a deal, or I want, find me a good deal, or, anything that makes sense, those are kind of red flags to me to say, hey, these guys aren't ready to know what they're really looking for.
Yeah, that's true. And I think if they can, if you're starting out in this business, you definitely need to find a base level of education. You need to understand the jargon, because if you call Colton or one of the guys up here and you can't speak jargon, you're going to instantly discount their credibility quite a bit. So I'll plug it again. We've done the last podcast. If you guys want to email info@oldcapitallending.com, we have about a 10 or 12 page white paper that kind of does multifamily finance 101. And that's a good resource, and you can learn a lot of jargon, some basic blocking and tackling on how to get a deal financed. And so that's info@oldcapitallending.com. So, Pete, do you have anything to add to that?
No, I was just going to add that one of the things we talk about a lot up here is when you do get that inexperienced buyer or would-be buyer, and usually the telltale sign is when they throw out a crazy cap rate. I'm buying at a 10 or an 11 cap.
Sure.
And it's almost comical. I mean, I can remember those days when we did sell at 10 or 11 caps, but it's just not happening now. So just try to be as educated as possible. Do things like listen to these podcasts, which are very helpful, very educational, and just gain as much knowledge and wherewithal as possible prior to making, the call.
Guys, I don't know if you have anything else to add. Again, what was the website again?
Website is www.rowan-properties.com.
Cool. We got Colton.
Yeah, all I'd add is that we've got a lot of properties on the market right now. We're moving a lot of deals, and we'd love to work with y'all and try to help you find your first or second or third investment opportunity.
That begs a question. Give me an example of a property that you guys are listing for sale. Talk to me a little about just one deal, and kind of give me the high level.
Yeah, we've got a deal out in White Settlement called the La Plaza Apartments. So that's a larger unit, townhome style, built in '69, pitched roof, individually AC'd property, very unique construction on the property. And so that property definitely needs some better management to the property. And so I think it's something you come in, upgrade the interiors, push the rents, as well as decrease the water bill and implement a water efficiency program. And so that's one of the deals we have out there right now in the market.
Yeah. So we like that deal because we did the loan for the person who's selling that property. So we definitely like that transaction. We like the asset itself. It is an opportunity to go take a look at. That was an unsolicited thing from Colton. Thank you, Colton, for bringing that transaction up. But we did the financing of the person about 3 years ago, and so the matrix in that property is very solid. So take a look at that one. So again, I'd like to thank the guys from Rowan Properties here in Dallas. Give them a call whenever you have a second to kind of visit about multifamily properties. They're very knowledgeable. They have a depth of knowledge on the multifamily in the Dallas-Fort Worth and the secondary tertiary markets. Again, thanks, Mike. Thanks for hanging out with us. We appreciate it, and we'll talk to you soon.
Thank you for listening to the Old Capital Real Estate Investing Podcast. Please join us at oldcapitallending.com to sign up for our weekly email updates. We'll see you here next week with another great interview.